In last week's video, I talked about the type of stocks that can make really massive gains. We're talking about 100% or more in a single day. Now, I had a lot of questions about, well, how do you find them? So that's what we're going to do this week. I'm going to show you the means that I use to find these stocks, find them early before they make their big run. Now, we always get in just a little bit too late, and I'll explain why in just a moment. Plus, I'll do my normal market analysis and we'll look at the trade of the week, one of those stocks that made massive gains in a single day. But let's get into this week's topic about how do I find these stocks and make these big gains. So first of all, we need to understand what motivates a stock to go up 100% or more. And it really comes down to having very strong buying interest and then a limited supply of stock. So if you have something, some catalyst that generates millions of shares of buying, but there's not millions of shares available to buy, then the stock can go up a lot. Now, these catalysts can be news, but oftentimes it's also promotion, and usually it's both. So in the stock market world, there are promoters who will take some of the company's shares and then push the stock up using online media, news articles, news from the company, anything that can generate buyer interest. Now, you've probably heard that term pump and dump. So the promoter is in charge of the pump. And if you're a good trader, you won't be around for the dump. Lots of stocks that I buy go up a lot after I buy them, and then they go right back down again later, but we always have an exit strategy. So nothing wrong with pump and dumps. What we want are the stocks that have that strong buying coming in that surprises the market. And when that happens, as more and more people learn about what caused that strong buying to start, more and more people come in and buy the stock and they bid the stock up in price. And that's why you can get these stocks making really big jumps. So most stocks, most of the time, are not worth trading. So we need to understand what's driving these gains. And I call these alpha stocks. They are characterized by abnormal trading volume, so much more volume than normal, strong liquidity, which is a high number of trades. So don't just look at the volume of a stock that's traded, look at how many times it's traded in a day. So the biggest winners will trade more than 100,000 times in a day. And finding number of trades is not always easy. A lot of platforms don't provide that. The platform I use, called TradeStation, does provide liquidity. My website, Stockscores.com, provides liquidity, number of trades. And then on the supply side, we want stocks that have a low float. So this thing right here is what we talked about last week. And a number of you asked me, how do I find out a stock's float? Well, TradeStation, and again, I have no affiliation with TradeStation. It's just the platform that I use for doing analysis. I don't even trade through TradeStation. I just use it for my analysis. They have floats for stocks. You can go to websites like Finviz, finviz.com, and you can get the float of a stock on there. So what we want is a stock that's got very abnormal volume, very strong liquidity, high number of trades, and a low float. Ideally less than 20 million shares available to trade. Again, that's called the float. But I'm always interested in anything under 50. If it's got 30 or 40, I'm not as enthusiastic about it because it's going to need a lot more volume to move the stock. Some of the biggest movers of the past week had less than 5 million shares in the float, but they traded 50, 100 million shares in a day and over 100,000 trades in a day. Some of them were over 500,000 trades in a day. So you've got very strong demand, and then the other side, very limited supply. And you can imagine if you had a lot of people wanting to buy a limited number of stocks, that is what can cause these stock prices to go up. Now, that still doesn't tell you how I find them. So what I did is I created some indicators that look for abnormal volume. If you put a stock that was abnormal in front of me, in the moment that it starts to be abnormal, it's pretty obvious and easy to find. The problem is there's thousands and thousands of stocks out there. How do we find them in a timely fashion? If you come into it half an hour after it starts, it might very well be too late. So We need a method to find the stocks that surprise with all of a sudden trading abnormal volume where normally it wasn't before. So what I did is I created an indicator for that. I call it an action candle because it's a sign that there's action in the stock. It looks for statistically significant abnormal price movement with abnormal volume. And we do a sweep of the entire market in real time, looking for stocks that are making statistically significant price gains with abnormal volume on a very short time frame. I look at it for a 1 minute time frame, 2 minute time frame, and 13-minute time frame. You could look for 5-minute time frame as well. Now, my action candle indicator is something that's available to active trader members of Stockscores. It's the only way that you can get it. Don't ask if you can just buy it because it's only part of your membership at Stockscores. But you can learn more about memberships at Stockscores by going to my website, stockscores.com. What we do is we look through the entire market looking for stocks making action candles. It starts with a scan. So you see here on screen, I first scan the market, then I calculate the indicators, and then when I have one that's made an action candle, I consider whether it's got the right pattern, whether it's starting the action or if it's already started earlier. So this is how it looks, my dashboard, if you will. Again, this is a program called TradeStation. I have no affiliation with it. I've used it for 25 years or more, and it's a great program. So this screen down here is the one that I primarily use. I find about 80% of my trades from that liquid mover list. What it's looking for are stocks that are making a 1 minute action candle with at least 200 trades. So we're going to look at URGN here. So URGN made its last 1 minute action candle at 211. So 1411 is 211 stock market time. And on that bar, it traded 794 times. And I can see that it's got 38.3 million shares in the float. So that's great. It's not as low a float as I would like, but it's still pretty good. Now let's go take a look at the chart, because on the chart is where you see these little pink and yellow dots. So anytime the stock makes a pink and yellow dot, you can see here 1, 2, 3, 4, 5, 6, 7 in a row. The ones that we care about are the first couple. So the indicator showed that there was one at 211, but they started firing a little bit after 2 o'clock. So this one's probably at 202 or something. These are 1 minute candles. All right, so at 202 there was one, 204, 206, 207. The last one was at 211, which was showing on that dashboard. But this dashboard will always show you the most recent one. So again here, the last one is at 211. So I've got this analysis running all throughout the day from market open in the pre-market until all the way into the extended hour session, which ends at 8 p.m. Eastern time. And all it's doing is looking through the entire US stock market, looking for stocks that are making these abnormal action candles. Now the key is we don't buy every action candle. We don't buy this one, we don't buy this one, we don't buy this one or this one or this one. We only buy those that are surprising the market with a break from low volatility with at least 200 trades. So here we have one from low volatility, so there's nothing happening in the stock, but it didn't have 200 trades there. It was a jump in volume, but not enough. Here we've got sideways trading. Here's the abnormal activity, and you can see the number of trades starting to really accelerate. So that's what makes me look at the stock. And then I've got very specific rules about where I buy, where I put my stops, how I size my positions. All of these things are important. You can't just buy action candles. There's a lot more to it than that, but that's how I find them. I have TradeStation running through the entire market, using the indicators that I created, looking for these things. And that's one other thing I want to say. I've always felt that if you do what everyone else is doing, you will get what everyone else gets. And by definition, what everyone else gets is basically average. I don't want to be average. And so that's why I use my own indicators, things that I've created over the last 35 years of trading. Because if I do what everyone else is using, say stochastics, MACD, those are fine indicators, but so many people use them, you're sort of trading with the crowd, not one step ahead of the crowd. Now I am one step ahead or behind the people that start the move because I wait for that first bit of abnormal activity to tell me the stock's ready to go. I'm looking for stocks that come alive where nobody cared about them before. And then I apply chart pattern recognition, reward for risk analysis, knowing where the stop's got to be. And all of those things are taught in the course material on stockscores.com. And again, you can learn more about that at the website. All right, so that's the basic concept there, is look for low volatility, sideways trading, action candles breaking from low volatility. I find them on my dashboard, primarily here, but we also look here. These are 2-minute action candles. These are 13-minute action candles. This is a list of low float stocks that are moving with abnormality and good liquidity. This is stocks that are trading with abnormal volume. So we have sort of a Swiss cheese approach to try to find the stocks that have the best potential by looking at lots and lots of different options. All right, so let's get into this week's analysis now. This is the chart of the S&P 500. We're going to go through this and just determine whether the buyers are in control, sellers are in control, that sort of thing. So let's begin with a look at the 1-month intraday chart, and you can see that the trend is up. Now the pace of the trend has slowed, so buyer enthusiasm is starting to fall off a little bit, but it's still in an upward trend. And as long as the bottoms continue to rise, we can say that the buyers are in control. My concern is that the tops are not rising as quickly as the bottoms, which is why I say that investor enthusiasm is starting to diminish. Let's take a look at the 3-year chart on the S&P 500. And you can see that the market's made back almost all of the losses that came from the trade war, the Trump tariffs and that sort of thing. So we've almost come back to even. Not quite there yet, but getting close. When we get to this peak here, we are likely to get stuck. And I think there's a good chance that we'll hit that and pull back from there. So although the market trend is decent, you can see the sentiment stock score is 63, which is above 60, the critical zone for bullishness. It's still a market that I'm a little worried about because I think that there is some potential for a pullback in the near term. No reason to run for cover. If you're in the market, it's still good, but just watch for a breakdown. Let's take a look at the NASDAQ 100. QQQ is the symbol. And if we look at the 1-month chart there, similar to the S&P, it's generally going up, but enthusiasm is slowing. And similar to the S&P, it's rising into resistance at those highs. Now the small cap index looks quite a bit different. You can see it's far off of its highs, and that's because interest rates remain elevated. And we'll talk about interest rates in a moment. Now the good news is the market was able to break through this resistance from a rising bottom this week, and that should lead to the small caps starting to play catch up with the large cap stock. So better chart for the small caps, but still lots of catching up to do. Let's take a look now at the Canadian market, T.XIU, and you can see that it is actually at the all-time highs ahead of the US markets, and that's largely because of commodities. So this is a bullish market, but again, starting to lose its momentum. Gold going through a pattern of compressing volatility. Why? Because the trend went parabolic. Anytime trends go parabolic, it means people were buying the market emotionally. And when people get emotional, they make mistakes. And so you go into this pattern of compressing volatility as it comes back to the linear trend line. Still a healthy chart, but kind of a dead market over the last 6 weeks. Let's take a look at oil now. USO is the symbol. And what we'll see here on the 1-month time frame is that oil is actually starting to rise. It's actually been doing well. It broke out on Friday. So short term, looking better. Long term, I talked about this a number of times in recent weekly videos. And of course, make sure you're subscribed to the channel because I do these videos every week. But I said oil was probably going to bounce from here because it was at these floors. It had hit it once, twice, 3 times. Hit it again, and sure enough, it's bouncing. Now, it hasn't quite made a strong break of that downward trend line yet, but it's getting better, and I think oil is going to start to recover. Limited upside to here, because that's also, just as this was a floor, this is a ceiling. We'll see if we can get back to that ceiling, but the oil market is looking better. Let's take a look now at currencies. US dollar is still weak. If we look at the 3-year chart, it is at a floor, so it should bounce, but the short-term chart has been moving down. Again, the momentum to the downside is slowing. So I think it's stabilizing and it's kind of a neutral market, but we need to see some buyer enthusiasm come in soon. Let's take a look at Bitcoin. Now, Bitcoin, I actually am going to download in the short term, or sorry, downgrade in the short term, because we've switched in the short term from rising bottoms to falling tops. In other words, the sellers are taking some control back in the short term. Now, the long-term picture is still fine. We are essentially in this long-term upward trend. We're a little bit above the trend line, and so it'd be quite reasonable to pull back a bit. I'm a little bit disappointed that it didn't get to the top of the channel before it started to weaken. That's a bit of a concern because it means that the tops are not rising as quickly as the bottoms, and that's a sign that investor enthusiasm is going away. We talked about that earlier with the market charts. Finally, let's take a look at the bond market, which of course is interest rates. And if interest rates remain elevated, that's hard on small cap stocks. Now, the bond market has stabilized over the last 2 or 3 weeks, but it's still in a cycle of falling tops. So it's getting better and it's at some important support. If we look here, it's got this strong support in here where it should bounce. It is starting to stabilize. So I think we may see the bond market move up in the next few weeks, maybe not significantly, but if it does, that means interest rates fall a little bit, and that can be supportive for small cap stocks, which is perhaps why the small cap index was able to start to break out through that resistance that I talked about earlier. So let's take a look at my ratings then. Hey, no red, that's a good thing. US large cap, NASDAQ, small cap, all bullish in the short term, neutral long term. Canadian market bullish on both time frames. I've lowered my short term rating on gold to neutral and long term bullish for gold. Oil short term bullish, that's an upgrade, and long term neutral, US dollar neutral on both time frames, mostly because it's at support. Same thing for bonds, neutral on both time frames because it's at support. And I did downgrade the short term picture for Bitcoin to neutral, but still long term bullish. All right, now we're going to get into the trade of the week, and that's another example of a low float stock that surprised the market with strength from low volatility. All the things I talked about at the top of the video, we get these every day, and it's lots of fun right now. So if we jump into NEGG, you can see here, low volatility. There's the pink and yellow dot. So that's our first sign of excitement. You can see the volume spiking a little bit. What I like to do is, if I can't catch this, because sometimes it happens very quickly and you can miss it. This one had actually lots of time. But if you don't catch those, you wait for the first pullback and the break of the first pullback. So that's a strategy I do every day. And again, you can learn more about that at Stockscores.com. And it cycles nicely higher, goes parabolic, breaks the parabolic trend right here. Good sell point there. Good entry point either here or here for a big gain, 50, 60% from the entry point. And for the day, the stock just about achieved a 100% gain. I hope you've enjoyed this week's video. Give me your thoughts. Do you trade alpha stocks? And if so, what is your approach for finding the hot stocks of the day? Love to hear your comments on that. Again, make sure you're subscribed to the channel. And as always, trade well.